What is going on, everybody? This is Andrew from DeFiancy. All right, guys, it is Friday, November the 17th, roughly 8:30 a.m. Eastern Standard Time, and we are looking at Bitcoin. Right now, we're sitting at about 36 and a half. And yesterday, we had a bit of a sell-off. As you can see here, it was a pretty nasty sell-off, actually, about 5% from the highs to the lows, actually closer to 6. And now we're kind of stabilizing a little bit after that move. And, we talked about this. We've been talking about this, that Bitcoin likes to chop around. It is a choppy asset. It is not like equities, which can just keep stay in a trend for significant periods of time. Bitcoin cannot do that. Not that it can't go up. As you can see, it's been going up most of the year. But look how difficult it has been for that to happen. Big move. Big move here. Nothing but chop for 60 days. Round 2, big move. Nothing but chop for about 90 days. Round 3, another big move. Double top. Chop, 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 chop for 60 days. Big move down. And you get the pattern here. Expansion, chop for 2 months. Expansion, chop for 2 months. And we have an expansion up here. And now we've been up here for about, half of what we normally do before we make another move. It's the same playbook by these trading firms. We call them the cartel if you're in crypto. They're doing this on purpose, right? What they're doing is they're keeping volatility low, intentionally, I believe, to run delta neutral market making strategies. Now, one of the reasons that is because Bitcoin doesn't have passive flows that are just coming in every day. So stocks, things like Apple, things like Tesla, every single day, there are financial firms and just investment firms in general, and also retail, that invest passively into these companies, no matter what. Right? You have people that are putting money into 401ks, no matter what. Doesn't matter if the market's going down, up, sideways, they buy. Bitcoin doesn't have that. So really what you get is spurts of buying because of news. The news kind of fades, the hangover kicks in, the music stops, and then you just go sideways. So that's where we are right now. We are waiting for confirmation of the ETF, which means you got to treat this like a range, guys. We got to treat this like a range. We got to look at this practical. You have a range high here at roughly 37.38. Okay, upper 37 is about 37.7 to 38. That's your dump zone, meaning whales are saying, I like to sell Bitcoin here. There's not enough buyers up there. And then your range low at this point, and we really haven't definitively set this range low, I'm going to say is about 33 and a half. Okay, I'd like to see this low taken out. I think that would be a very constructive move. It'd be a lot safer to start scaling into positions down here. But for now, it's holding this uptrend. Now, I'm not a big fan of these uptrends, to be honest. Not that they can't last. As you can see, we actually did the same thing down here, and it actually worked out. Some people like that because it's higher lows. I don't like it because if price sits here too long, what you get is something like this. You get these really big vertical moves down because these positions build up over time, right? And you need to take the trash out, in my opinion, to really be comfortable in a Bitcoin long here with some leverage. Now, if you're in spot positions, I don't think that's a big deal at all. I don't think your downside is all that much. You shouldn't expect all that much downside. I mean, if you come back to this level here around 31 and a half, you already know you're going to have buyers, especially if you get to this 38 or 28 level. I mean, I think this would be like you'd have a massive demand there. I don't think you get there. But there's a lot of support. I think that from a risk reward standpoint going into the next couple of years, you should be looking up and be looking down if we get there, if we get to the downside as opportunities. Now, one thing I want to mention is, we've been talking a lot about. Well, actually, I was about to go into a recession spiel about why I think we might be going into a recession, but before we go there, I think I want to end there, more of a macro discussion. Let's talk a little bit about our altcoins, which are like the fastest horse in the race right now for this risk on rally, this global risk on rally. We're looking at NEAR right now. It's up roughly like 10% overnight. We had talked about how constructive this price action was here. I love these patterns, this jumbled up patterns of whales creating these higher lows and higher highs. And eventually you just get this pop because, again, this is not random. It's price action. So I believe there is a lot left in the tank for NEAR, but we do need Bitcoin to behave. In the short term, I'm expecting this to go up to about 2.7. Doesn't mean it can't come down first. I really don't think there's a ceiling on this until you get closer to there. And I don't think that's really a ceiling either. It's just, look how wrecked the prices are. Do you really want to sell, right? If you had bought as an investor right here, when, you're down right now like 90%. You're really going to sell right here, right? No. So I just don't believe that people are going to unload tremendous amounts here. Of course you're going to have profit taking. Of course it's going to be volatile. But this is one I like that, I think regardless of really what Bitcoin does, assuming, well, obviously Bitcoin needs to stay sideways or go up. But as long as Bitcoin doesn't, have tremendous, take a tremendous downtrend from here, I think you're just going to go higher with some of these alts like NEAR. Okay, let's look at AVAX. AVAX, I think we have finally put in a local top here. Maybe. A lot of people shorted after this 12-hour candle, or let's look at the daily. It's a little bit more clear. You had a big rejection here, and then it just, boom, blasted off like 10%, and now it's basically back towards where it opened. I think this is going to start to cool off, and there's a lot of alts like this. So for this one, I'm like, all right, let's wait to see what happens. I'm going to be more interested in this one. And it's kind of hard to say exactly where. Excuse me. I should have had these levels out for you guys. Let's look where we like it, because I'm not actually sure. So as you can see, we're looking at this volume node here, and this is where whales we're buying. So I'm thinking probably on the top of this volume shelf is where I'm really interested in adding some longs. Anything below 18.5. Okay. Not interested in it until we get there. That will be about a 15% pullback, totally reasonable for altcoins. Obviously, this is probably going to coincide with Bitcoin testing its range low, that 33.5 level, I would suspect. But I expect that to take place over the next few weeks, maybe even the next few months. I guess what I'm saying for some of these assets that we've been talking about, like AVAX, is expect chop. Expect some consolidation, some profit taking, and that's great. That's healthy. This is what you want, right? For altcoins that are going to be successful later is just regularly what I call taking out the trash, right? Having these sell-offs, it's very healthy. So yeah, there's a lot of coins like that, guys. Again, NEAR is, as you can see on my list here, it's performing the best out of the coins I've been paying attention to, like Atom and Render and DYDX and AVAX, because it hasn't really taken off yet, right? All these other coins we've been talking about have been in liftoff mode, and NEAR is just basically playing catch up. So still bullish on this going forward. We've talked about that though. DYDX, I really am interested in this one after it can show me that it's got some buyers. It's retesting this zone we talked about yesterday, this 3.5 level. but I'm not gonna try to catch, I'm not gonna catch a knife on this one. I'm gonna wait until it turns around. I'd rather be late than early on this one. And this is the same thing for something like Render. It's another one that I think that's going to do well going into the end of the year. But I would like to also see, it. I'm not so sure this one's going to pull back all that much because honestly, it really hasn't taken off that much from this consolidation zone. Yes, it's a pretty big move, but all things considered for altcoins, I mean, that's not that crazy. I would expect for this to actually go up quite a bit more before you have a significant sell-off. It's not like AVAX, which has just been on a tear, straight vertical. This is a pretty constructive base. And the more constructive base you have, the higher you're likely to go before you have a tremendous pullback. Now, I'd like to see it. Let's just say, if it does give us an easy entry, anything around 2.5 is like, I'm going hard there. If we get, if it's generous enough to give us that level. But for now, we're just going to watch it. Let's talk a little bit about global macro now. And I'm going to do my best, guys, to get this out as clear as possible. This is like my 4th or 5th time recording this video because I realized I needed to get my facts straight and be able to articulate this information to you in the best way possible. So, excuse me if I'm a little bit tongue-tied this morning. I'm going to drink a little bit of coffee to help me. Oh, man. I like that coffee. Strong and black. All right, so right now we are looking at the S&P 500. And as you already know, beast mode S&P 500 has been on an absolute ripper for really the last 2 weeks. You had a bit of a pullback here, and it has been up only ever since. Really up only from Sunday. The open was around here. And we can talk about reasons for this, but I really want to just look at things on the most basic fundamental level, right? Which is things were oversold. Seasonally, markets are bullish going into the end of the year. We call that the Santa Claus rally. And we know that the Fed is not going to be as hawkish as they have been over the last few years. And you may be wondering, why do you think that, Andrew? I'm going to tell you why. Because we have a lot of signals that are showing that we are headed into likely a recession. We are likely heading into a recession. Why do I say that? And I'm not a macro expert. I just am using common sense that if Russia and Saudi Arabia cut oil production, which market like that for a brief period of time, we had this huge run up, but now we're basically crashing. This thing is like going parabolic to the downside. Why would that be the case? Like week over week, this is pretty ugly. Why would that be the case if we are cutting supply and if demand, which was supposed to be at least somewhat stable, because people said, hey, we're not going into a recession, soft landing, economic data is good. You shouldn't be seeing this. So what I'm saying is this is a red flag. This is telling you that the global economy is slowing. There's a lot of subjective signals that I don't even want to talk about because I'm like, yeah, maybe they're a good signal, maybe they're not when it comes to recession. But this is a very blunt, basic, hard to argue with signal. If people are not using as much diesel and energy, what is that telling you? Especially whenever the supply has been cut. It's telling you that the economy is slowing down. You just don't know it yet. It's like you're probably already in a recession. It's just the data hasn't came out to show you that you're in one. It lags. The data that the Fed is using they're looking in the rear view mirror. So this is why the Fed is going to be soft. They're not going to be carrying around a big stick smacking the market down anymore because at this point it's a bigger risk of deflation. Now I actually don't think that that's like super likely, but it's something they have to analyze as a serious risk. They raise rates too quickly. And what they will not be able to do it's controlled deflation as easily as they've pushed it down. If you actually look in the past, deflation is a pretty hard thing to deal with for the Fed. It can have pretty dramatic consequences because people expect prices to continue to go lower and they don't buy things. This is what they're worried about, in my opinion. And if you think, well, that's just one data point, okay, why is CPI going down? Now, it's not falling off a cliff, but it's lower than expectation. That's disinflationary. I'm not saying we're in deflation yet, but that is disinflationary, and disinflation can lead into deflation. It is a real possibility, right? You have U.S. PPI month over month down. You have U.S. employment claims up. You have U.S. industrial production month over month down. Looks like a recession's coming, guys. Is it going to be a big recession? Is it going to be, well, that's not, we can argue about that later, but I think at this point, let's get ahead of the curve here. Let's get ahead of the narrative. Let's get ahead of the sheep on Twitter or on FinX, as we call it, CNBC, and realize, okay, what does that mean for our risk assets that we love so much, like Bitcoin? Well, you can analyze this in several different ways, but I think based off of, and let's look at the broader risk market, say the NASDAQ, for example. Because you're way up in the air here, mega rally has already occurred. I believe that institutions do not like what they're seeing right now. They know that the Fed cutting rates is not actually bullish for risk assets for a certain period of time. It's only bullish for them later. And I'm thinking that we might not have the Santa Claus rally quite like people expect, which is a lot of people are thinking up only into next year, which is possible. And if that is the case, it's great. I'm long crypto right now, right? But I'm also prepared for a 30% drop in Bitcoin if that happens, right? So basically what I'm getting at here is I think we should be expecting a sell-off over the next few months. And I think that this is a perfect opportunity for people to enter the market, especially crypto, because crypto has a perfect storm. Risk assets in general, but crypto is unique in that it has multiple narratives, right? It has ETF that's likely to be approved in January. It has the election year, maybe the most important factor, and then it has the Bitcoin halving. And what happens if we're in a recession and the Fed starts printing a bunch of money again sometime Q1, Q2 next year with all of that information available? Well, I think that's how we have our huge bull market rally that everybody is expecting going into 2025 and beyond. So what I'm saying is I think now things are going to start to cool off, quite literally for the economy, but also for assets in general. Not that this rally is done yet. It might have some more legs. But now we need to start paying attention to the macro to kind of get a pulse on that. And this is my analysis of what a deflation or fears of deflation, what that might do to risk assets. But I could change my mind on that. This is just where I'm at right now. And look, we're just having a discussion here. This is not financial advice. Just kind of how I see it. But yeah, guys, I think that's all I really got today. Again, expecting pullbacks across the board for risk assets in general. And I'm going to be paying very close attention to the macro stuff to try to get a pulse on what it might look like here going into the end of the year. And we're going to talk more about that later. I hope you guys enjoy your weekend. Until next time, happy hunting, friends.